Let's go, baby. The markets are back in the green yet again. We got to break them down this video. We also have to go over 3 stocks that I'm looking at now. But before we do, make sure to get your free money from Moomoo. You get 1 free share of NEO guaranteed and up to 5 other stocks, each of which could be valued up to $3,500. Just use my link down below. Deposit at least $100 and boom, you get your free money. And with that being said, let's break down what's going on because today, yet again, we are in the green and we got to see what's going on. So it's about 1:15 p.m. on the East Coast. We have the Russell up and the S&P both up about 0.5%. NASDAQ's up 1.4%. We have the Dow up a whopping 0.1%. So the Dow's actually not doing that well today, but still it is green nonetheless. VIX is down 5.6%, and we have gold and silver both down a good chunk. Silver's down 2% and gold's down 0.7%. So today's a great day. Stocks are up. Volatility's down. The VIX is now dying down into the low 20s, which is fantastic. If you guys have been looking at the VIX, you know this thing's been above 30, 35. I think it was above 30, 35 for a good month. I mean, that's insane. I mean, that's got to be some sort of record. I don't know if it is. Probably not. But, I mean, we were above 30, 35 for a good month straight. Now volatility's dying down in a major way. Like I said, VIX is in the mid-20s, and it's going to the low 20s by the looks of it. So that's good. Fear volatility is dying down. Gold, silver, which is another sign that fear is dying down and kind of the uncertainty. So that's what we're seeing right now. That's what we're seeing. And if I pull up SPY, let's break down what's going on here. In particular, it's breaking out of the moving averages, which is great, and that's on the 4-hour chart. And mind you, we haven't done that since, let's see here, we haven't been above the 180 SMA since the middle of January for SPY, and that was 2 months ago. So we're breaking out. Fantastic. Now we're wrestling with 441, 442, which you guys can see here on the 20-day chart. That was resistance end of February, early March. So we got to break 442. That's why my alert is there. And if 442 breaks, SPY's probably going to start moving towards, let's see here, 448 followed by 458, like I've been saying in these previous videos. So this is great. We're getting there, guys. SPY's up 0.5%. Intraday chart looks fantastic. It's been uptrending all day. Let's see how it plays out the next roughly 3 hours, 2 hours and 45 minutes. It's going to be interesting, right? And let's see Triple Q. QQQ tracks the NASDAQ 100. You guys should know that at this point. This is also breaking out. Look at that, guys. Breaking out of the 180 moving average, which we haven't been above this since the early days of 2022, so about 2.5 months ago. And we're also now breaking out of the highs from, I believe, last week. Let's take a look here. Last week and yesterday, the highs from yesterday being 345. So right now we're gunning for 350, which was resistance end of, let's see here, February, early March. So if 350 breaks, I have my alert at 355 because I want to see it get momentum above 350, and we break 355. This could start really reversing, and we might get an extended rally. We might get an extended relief rally, not these little 2-3 day rallies and then we start dumping again, which is pretty much what we've had over the past couple of months. I mean, just look at the chart. Last rally we saw in the beginning of, when was that? Beginning of March. Let's see here. Triple Q went from 320 to about 350. That was just 4 trading days. Then we dumped and took the lows out. Now this rally so far, it's been 1, 2, 3, and today's the 4th day. It's 4 days, but if we start breaking these levels, we might have a 2-week rally. You know, we might have a 10 trading day rally. It's possible, and quite frankly, it's kind of overdue. Triple Q got into a bear market. It was down 22%. So could we rally 10%? Out of that 22% loss, yes, we could rally 10, 12%, 15%. Definitely possible. So that's a quick breakdown on what I'm seeing right now and kind of where my head is at. You know, I'm not ridiculously bullish at this point, but I'm not really that bearish anymore. I mean, I wasn't really that bearish to begin with. You guys have to realize, even if we're still in a bear market, we can get rallies within the bear market. and extended rallies for that matter, not these little 2-3 day rallies. We can get, like I said, a 10, 12, 15 trading day rally. We'll see. We'll see how it plays out. Let me know your thoughts down below in the comments. And if you haven't done so already, guys, make sure to smash that like button and subscribe. And let's talk about some stocks. We have 3 in particular that are breaking out today. A lot of these are breaking out. So let's talk about NVIDIA. And this is another sign that we could be at a point where a reversal, a short-term reversal, is upon us because NVIDIA is breaking out. It's breaking out of the wedge, the descending triangle that we were in. I guess it was a descending triangle that we were in for a good couple of weeks. We're above the moving averages. It also took the highs out from a couple of weeks ago, 2 weeks ago roughly, earlier in March. We struggled at 245 today. We plowed right through that. We're now at 260, up 5.5% on the day. So NVIDIA is completely breaking out, guys, above moving averages, all that good stuff. Now, the only big resistance coming up, even though it is breaking out, it's looking fantastic. Only main resistance coming up I'm looking at is about 265, 270. It's going to be a bit difficult there, I think. That's where we double topped in the beginning towards the middle of February. You guys can see here we double topped there. So we got to get momentum out of 270. If this rally needs or wants to have legs to it, or if this rally is going to have legs to it, period, it's got to break 270, or else we're probably going to get rejected and maybe go right back down to 245, 250 again. So we just have to see and be careful. And I'm not rushing into it right now per se until we break 270, because NVIDIA, we all know it's one that can move very quickly. And if it cracks 270, we could close our eyes, we could blink a couple times, and the stock could be at 300. That's how quick it gets. And I've mentioned before, I'm not looking to buy NVIDIA at these levels right now as a long-term investment, but as a trade, you bet your you-know-what, if the technicals line up, which right now they're slowly starting to, I'm going to trade it, even if it's overvalued fundamentally, which we're not going to get into in this video. So that's number one. NVIDIA. Square's number two, which I mentioned in my Patreon video this morning, and if you guys do want to join the Patreon, that's linked down below if you guys are interested. I mentioned how Square is one that I regret buying or not buying because it went down again to $81. And I said in that video, if I were to buy Square before earnings, it would have broken one of my cardinal rules of trading, which is don't buy right before earnings. If you want to gamble, just go on DraftKings and sports gamble. Do that instead. Don't just gamble on earnings unless you have hardcore, I don't even want to say evidence, because then that means you'd probably have insider trading, which is illegal, or insider information, which is illegal. So unless you're extremely confident on earnings, even then, you never know. But unless you're extremely confident, don't even try and gamble. So this is one that I wish, with benefit of hindsight, obviously, I wish I bought before earnings, but I didn't, obviously, because it would have broken my cardinal rule, one of my cardinal rules, and it's up 65%. But if it went down 65%, it would have been good, because I would have, I wouldn't have gotten into it and lost money. So obviously, in some scenarios, it goes up a lot after earnings, and some it doesn't. And that's why I just don't play earnings at all, because I'm not trying to gamble. And anyway, enough of that. Square today is breaking out again. We not only broke out after earnings, we took the moving averages out, and then we fell under the moving averages. Now we're breaking out again as of a couple of days ago. Now we're breaking out of 130, which 130 was the high point after earnings. We went from 81 to 130, cooled back off to $90. And now we're at 136. So we're completely breaking out of 130. Again, today we're up 6.5%. The stock seems to be filling the gap to about, let's see here, 150's next, 152, which was the high from the middle of January. And if that breaks, 170's next. And this is another stock like NVIDIA. We could close our eyes, we could blink, and then a minute later, 5 minutes later, but obviously not in 5 minutes, but it seems like 5 minutes, the stock could be $180 a share. It could rip just like that. That's the type of stocks. These are the types of stocks that we're talking about in this video, and they're not crazily speculative, I would say. They're more fundamentally sound, but they're just wildly volatile. And they're growth stocks after all, which a lot of these growth stocks are wildly volatile. So, yeah, watch out for Square. It's breaking out. Check out for 150 to be coming next. And I'm not saying that's guaranteed. I'm just pointing out levels here that we could get to. Keyword is could. And the last one in this video is CRM. Let's pop it up and see what's going on. CRM's up 2.8% right now, and it's also breaking out. It's breaking out of the 180 SMA. It's been above the 50 SMA here on the 4-hour chart, but now it's breaking out of the 180, and we haven't even peaked above the 180 SMA since the beginning of December, guys. This is a huge break. Last time we were at these levels above this moving average was 4 freaking months ago, and now we're breaking out. So the stock's up 3%. It's breaking out. Looks like we have a bottom, at least in the short term here at 190. We triple bottom there pretty much, other than that one-off drop to 181, which we rebounded right after that. That was a quick rebound. So CRM's looking good. Strong consolidation at 180. And if we pull up the 3-year chart, look at this. Where's 180? 190, right by the long-term moving average, the 180 on this 3-year chart, which is great because that's held as support over the past 3 years. And if I pull up the max chart, let's see the max chart, we're holding the trend on the max chart as well. So CRM looks great on a longer-term chart basis. The short-term charts, 4-hour and, the 20, 90-day charts, those are starting to look pretty good as well. So, yeah, it looks like all things in the stars are slowly starting to align with CRM here and Square and NVIDIA. So that's why I'm covering them in this video. And that's it. That's it. Hope you all enjoyed it. If you did, hit the like button, subscribe, drop me a comment, let me know your thoughts. And don't forget to join my Patreon if you guys want all my buy, sells, call-outs, morning videos, more access to me, and Discord access throughout the day. That is linked down below. And you also can get some free money for Moo. I'm not even kidding, guys. It's free money, 1 free share of NEO, and you get up to 5 other stocks, each of which could be valued up to $3,500. Use that link down below, deposit at least $100, and boom, you get some free money. I'll catch you all in the next video. Thanks for watching. Peace out.